right, guys. What is going on? What is Gucci? Man, did you guys just hear that alert, G? Did you guys just hear that alert? What was that? It was silver. Ooh, silver. Jesus, 4% on the day. And we are at hot. Oh, good grief. We are at fresh highs in like a decade. Ooh, look at that. I wonder who told you last year to buy silver. I don't know. I don't know. Might have been me. Probably wasn't. Anyway, next up, October of 2012. Man, that's when I graduated high school, brother. 2012. Anyway, we are almost at 33. We're at 33 on the future side. We're at almost 33, I guess, on O and hot damn, chat. That's beautiful. That is just so crispy, so clean. Chat. I've given you trades on every time frame. Every time frame. Doesn't that make you feel good? That makes me feel. You don't want to know how I feel. Okay, I feel like Leonidas from the 300. Okay. Wick in 1 minute time frames, wick in the monthly time frames, like, bro. Golly, bro. That's just disgusting. Pure, just look at that up candle. Look at that. Nice, beautiful, just, man, that's like a fresh pizza, you know? Y'all ever gotten a pizza delivered and it was still hot, you know? Love it. That's just nasty. Anyway, that's not at all even what I wanted to talk about today. I really wasn't even going to get into that. But the alert had popped off. Look at that, dude. Just straight jamming and jamming and jamming and jamming. Physical silver going bonkers today. I love it. But that is not what we're here for. We are here for the S&P and Nasdaq. I was on demo today. I didn't want to do anything live or on the funded account or on the next combine account. So I was like, nah, I'm gonna just chill out. But I'm gonna go into demo because I'm gonna press buttons either way. You understand? Do you understand, chat? So, that music is unusual? Dude, don't get fucking banned, bro. That's Breaking Benjamin. That's Breaking Benjamin, dude. You better be careful. Be careful, Z. Just be careful. That's all I'm saying. They were one of the first rock bands that I got into in middle school, actually. So, tread lightly, Zocjo. Anyway, what's good, Felix, Zocjo, Z, Mason, Grauberg, Cameron. Appreciate the contribution to the Discord. Thank you, thank you. What's good, Willow? I don't even know what that is. Anyway, Natasha, what's up? Convicted Capitalist, Toby, 2020, Amin, Pop, Falaco, Juan B, Allison, Marshall, MJ. Oh yeah, Diary of Jane. As I turn another page. Yeah, dude. You know, those 6 a.m., 6:30 mornings, man, in the back of the bus, you know, it's just like on a rainy day, just listening to Breaking Benjamin, just broke up, you know, it's just like. Anyway, before we get too nostalgic on you, some of you might not be old enough, and that's okay, but There was a few interesting things I wanted to talk to you guys about today, and that will require flipping back and forth between the regular trading hours and the electronic trading hours. Okay, so we definitely have some disparities, not in the price action, but just like the highs on Dow in regular trading hours is different from the highs in electronic and stuff like that, and that can be a little bit confusing, but I want to show you some stuff. Okay, so you might not have seen this. Honestly, I didn't really see it until a little bit later, like right in here, right around lunchtime. Okay, so I don't expect you to get this right off the rip. But if you've been studying a lot, then you probably should. But don't feel bad if you don't see it. Okay. Yes, it is. Yes, it is Friday. What's in oil? What's on that oil? Are we going for downside on NQ? Probably not. But don't let me take your trade. You take your trade. Top Step X finally allows you to switch between regular trading hours and electronic trading hours. Yeah, I think I found that out like yesterday, the day before. Because I hate, like, it's hard to explain because you guys can't see it, but I have a 27-inch monitor here, and I have one right here. And then, obviously, my desk. I have a keyboard, Stream Deck. Forgot what that shit's called. You plug your audio interface. There we go. Audio interface, mouse, and then this big microphone, which you probably can't see. Let's see if I can do this. It's a big, see that? Microphone. Okay, that's on like its own stand over here as well. This stand's actually for like recording drum sets, but whatever. And so with that space I have here, what I was doing is putting my laptop right here. And it's like the laptop's getting in the way of the other screens. And I'm like trying to look over here, trying to look over there, trying to execute on my laptop. Like, it's not fun. And in order for me to do that on Top Step X, I had to put my laptop here, and then I had to look at the other screen and do it that way. And it was just a bitch to do. In short, it was just uncomfortable to do. Oh, you're long micro crude oil? Nice. I don't trade oil, you know? I don't trade oil. I haven't done it in a long time. But anyways, what do you guys see here? Look closely. Look closely. Closely. I mean, like, really, really look at it. What can you guys see? Felix says a market maker buy model. MJ says framework. Well, same thing. It's just easier to say framework than it is to say MMBM or MMXM or market maker model or whatever. Framework is just a lot easier to say. I haven't traded oil in forever, but everything else wasn't looking too clean today, so I had a little mosey on over there. Okay. I like that. What's good, Kevin? Okay, so is Felix right? Is MJ right? Do we have a market maker buy model? Do we have it? It was expanded from yesterday, right? The consolidation at 12. 12. I think, are you talking about this here? Like this right here? Are they right, chat? Drop a 1 if you agree. We got 40 some people on here. Drop a 1 in the chat if you guys agree. Is there a market maker buy model? Yes or no? I see equal lows from yesterday. Allison, I'm going to get into that. I will get into that. Convicted, I'm going to get into that too. Cameron says no. If you said there is a market maker buy model, then you would be correct. Then you would be correct. Yep, you pointed out the consolidation. Perfect. Low resistant highs, beautiful. We drop down, breakaway imbalance. 5-minute time frame, micro. I wanted to mark up ES. I was on the micro side, so this is why we're there today, in case you were wondering. Level of distribution from yesterday, and then into the close, right? We sold off into the close, and that was below this low here. Now we open, because mind you, I have, it might be hard to see, it's down. Oh, you can see that. It says regular trading hours. So that's why we see this gap here, right? What did we gap what did we gap up into? That imbalance here, which we traded what? Halfway. Ooh, that's pretty sexy, isn't it? Yes, it is. That's your low risk buy. I know. It's hard, isn't it? Where's the low risk buy? It comes after manipulation. There's your manipulation here. That's your low risk buy. Notice we never trade below the manipulation low. So right at the open, we crossed what? Follow the rules, chat. 50%. We crossed that already at our open. So then we drop down back into a discount. 25% level. What happens around 25% levels? Low risk buys and first stage. Go back and watch the market maker model masterclass. It's all in there. Spooky shit, I know. It just happens to have our low risk buy. It just happens to give us that 25% level at our first leg of distribution. I mean, accumulation, sorry. First leg accumulation. We crossed 75%, which doesn't necessarily mean anything by itself, but what do? We consolidate. Which means what? That's your second leg to go higher up for those highs. So yes, there was a market maker buy model. Yes, today was bullish. And now you know why I was longing NQ. And again, that was on a paper account. I'm pretty sure I might not have said that on Instagram or not. I'll need to go fix that after this. Just to make sure, because I always want to make sure I'm transparent. If it's demo, I want to tell you, or if it's like a combine account, I want to tell you. That way you don't think every trade that I'm posting is a real trade, because that would be misleading. Let's go to we'll go here. Okay, we'll check out some of these disgusting entries and exits. Not that I want to brag or anything, but yes, this was paper, so it's fine. But what you'll notice here is what are these? What are these? These are what? Low resistant lows. Are they not? Willow, you go to, it's the settings on the top left. And then you go, I don't remember off the top of my head, but there's it's one of the tabs and it's a checkbox that says show executions. It's there. And then you got to save it and you'll see it. But it's annoying because the numbers cover up the prices sometimes. So I don't usually try and show the price or the entries and stuff until after, I'm at TP or after like the trade is done. I don't try to have all this shit on my chart while I'm in a trade, then I can't see. So, all right, cool. So what are these low resistant lows? That gets taken, right? We know the markets trade from what to what? Liquidity to liquidity. But now what do you see though? But John, you have an exit way up here, right? So I'm long 2, and then I long 2 again. I'm immediately just adding because I'm a G. No, I'm just kidding. I'll get to the markups in a second, but what do you see here? On this leg lower, that took liquidity, right? Look in here. What do we have? From this high down, what do we have? We have an imbalance here, and we have an imbalance here. Clear as day. This one here got traded into to the high end, reacted a little bit, doesn't make a lower low, then we trade through it. So what does that make this? What does that make that? This one up here, that got traded into, high end of it, it trades back down into what? What's it trade into? Then we close outside the parameters of what? That imbalance. So as soon as it comes back down, I'm entering again. Okay. So I'm like stacking here. I'm not worried about this. Okay. I'm not worried about this because that's still inside the inversion. TP1, new high. TP2, this high. TP3, high of day. So that's why you see immediately that new high there, out 1. That high cleared here. That's what you see on Instagram with the blast beats. Da, 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 da. I know. Your music sucks. No, you suck. High of day here. Bam. That was on Instagram too. Both of that. Well, the first one here and then that one there, you saw both on my Instagram story. That's what that is though. So that's the benefit you get here, man. You get the full explanation. You get the full reasoning. You get all that stuff, right? Because you don't see too many mentors doing this all the fucking time. All the time. I just don't post all my trades, but dude, come on. How many people do you see out here that are consistent like this? It's not a lot. There's a few. It's not everybody though. Okay. And it's not to like say, look at me, look at me. But it's to show you like, bro, if I can do it, you can do it. You understand? So entering, right? Stop could go to this low. I mean, that's obviously a little bit of rebalancing here, but I'm more focused on that inversion. So once that and we wick off of that, I'm like, oh yeah. Entering, easy. A little bit of drawdown, not a big deal. Out, out, out. And then obviously once we get a new high day, I take my stop from break even. And then I think I bumped it to like this low or one of these wicks right here. And then, so that last exit was, you know, not that great, but 3 out of the 4 were pretty deep into profit. Okay. Especially that third one. So in 4, out 1, out 1, out 1. And then the final one was more or less a little bit in profit. Nothing fancy, but you see how hard that is? It's not hard. It's not difficult at all. Trading is difficult, I'll give you that. But after a long time of doing this, it's really not all too difficult. All right. So here is the same thing, same executions with the arrows and everything. And I don't know why sometimes it always looks blurry. Now it should be clear. That's so weird to me. I don't know why it does that. But whatever. Okay. So again, same ideas here. Nothing has changed. I scrunched up the chart, put it up here. And I'm overlaying ES because now you understand, right? We have lows here that were cleared, right? Anyone who was trailing, or if they're long from this morning, if they're trailing their stops, they're going to be here, right? Who Who sells in a discount? Dumb money, right? Because think about it, from this high, or excuse me, this low up to this high, this is right around 50%. That's probably the upper half. But this run here is in a discount. So who shorts in a discount? Dumb money. Dumb money is trying to short below old lows. Smart money buys below old lows. How do we know this is manipulation? ES here is higher. So ES is under accumulation. Nasdaq's under manipulation. If they're going to grab stops, then they're going to take it higher. And that's exactly what they did. And I want to ride that wave. So obviously I should have went on a real account, or I should have went on, you know, Combine or some shit. I would have absolutely destroyed that. But chat, I say this all the time. It's not always about taking every trade, you know. Friday historically is my worst day, which is ironic because I actually got funded on a Friday. So that's always cool. You know, to improve and be better. But ultimately, this is pretty simple stuff. This is pretty simple stuff. What we can do now is go into NQ. Okay. And here is what that looks like on a regular trading hours. Okay. Because keep this, put that to the side for a second. Okay. When we have this gap here, okay, remember what we do with large concepts. I mean, you can do this with even small concepts too, but, you know, with large concepts, what do? We cut them in half, right? If I could bring back the pizza analogy, right? We cut it in half. Drop a like if you guys are getting some value so far today. I don't think my button's not even connected anymore. What the fuck? Yeah, drop a like if you guys are getting some value today. From Thursday's close, okay, up to our open at 8:30, right? This is what that looks like. So if we take this gap, right, what do we have down here? The lower half. Now, why would that be important? The lower half. See that? What do we not trade into? What do we not trade into? We stay in the upper half. You see that? And I'll change the I'll make that different so that way we can tell. Oh shit. That way we can tell the difference between the two. Okay? So we can take that off. And there you have it. There's your upper half and your lower half, right? So we never trade to the lower half. What does that tell you? Okay? Let's get some chat participation. What does that tell you when price does not trade, in this example, to the lower half or even like the lower end, meaning like the bottom 25%, for example? Meaning more like if we took the lower half and then cut that in half again, that's what I mean, like even the lower end of it. Okay? If price doesn't get to the lower end of it, much less not even halfway, what does that signify? It's a bullish signature, right? Market is bullish, strong, strength, whatever word you want to use for it. It all means the same shit. Is that it's a strong market, right? So And obviously where we are now, I don't really know, but the point is how we left that this morning. Okay. The lower half is still down here. So when ES was under accumulation, right? NQ was under short-term manipulation, but overall still showing strength. Now watch this. What's up here? What's up here? Your 10 a.m. macro. Ooh, look at that. 950 to 1010. The macros seek what, chat? Macros do one of two things. They either seek liquidity or an imbalance. What did they seek today at our 10 a.m. macro? They sought liquidity. But if ES was higher and this is lower, that's manipulation, plus we have low resistance highs. Well, that's a bet. Okay, then. So then what should we do? Inversion prior to, or excuse me, imbalance prior to a stop run. Oh, yeah. That's in a beginner series. What is that? 1 to 2. It's good for me. It's good for you. We actually might not get a 1 to 2 out of this. To that high, we don't. But if we extended it up to right there, which is more closer to the high of the day, there's your 1 to 2. There's your inversion model. Ooh. Man, John, you gave all this shit out for free, dude. Fuck. Yeah. Of course I did, dude. What do you mean? Oh, sorry, it doesn't hit until right there. There you go. Boom. Look at that. Inversion model 1 to 2. It's good for me. It's good for you. Too easy, chat. Halfway, because it's divided, right? See that? 50% right there. Now, what I entered on was this. Okay. Now do my entries make a little bit more sense? I entered on this candle here. Why would I do that? Chat. Look at this. I really want you to like pause for a second. Remember we cut this imbalance in half, right? Remember what we did over here with upper half, lower half? Do that again here. Do that again here. Here's your upper half. Here's your lower half. What's this right here? A down candle, yes. Yes, it is. So it's hitting that. And then it's closing outside of it. So I'm thinking during that candle, I want to be long. Once 1007 closes, it closes, outside the parameters of that imbalance, which means that becomes an inversion. So as soon as it trades back down into it, I'm long again. What does price come into down here? But what does it never do? Oh my God, John. This is fucking crazy, dude. This is insane, bro. You talk about this shit and then like it just keeps panning out and panning out. Well, duh. You think I'm going to teach you some garbage? No. These are the parameters of the inversion. What does price never do? The bodies are respecting the halfway point and it's not trading to the lower end of it. It's not trading to the lower end of it. So what is that? Bullish. Bullish, chat. What does price trade through? These down candles here. What does it trade back into? Down candle, and then launches. Ooh. Yeah, that's not bad, is it? Okay. Again. That long wick candle here, remember, I'm entering on that up candle and this down candle, right? And then I'm exiting on the way up. That's right here. With the logic, with the liquidity inside the 10 a.m. macro, because it's right at 10:07, 10:08. That's still inside the macro. You guys don't know, bro. You guys do not know the power of this, all this shit, dude. You don't. Do you realize what this will do for you? Do you realize what kind of entries you can get? I mean, seriously. I don't want to pull it up again. I don't want to keep showing you, but look at my entries and then look at my exits. Well, the last one was shit, but the first three were solid. All right, because I wanted us to keep going, you know, just in case. I always talk about leave a runner, right? So it's like, all right, John, we'll leave a runner. Okay. In, little bit of drawdown, not a big deal. It's just the lower half of the inversion. Not an issue. Trade through it. Exit 1. Exit 2. Bam. Exit 3. And then the Ask McGee exit. Okay. But dude, time, price, context. What's the time? 10 a.m. macro. What's the price? Inversions. What's the context? We should see higher pricing. We saw manipulation back into the upper half, still respecting the upper half, and then bullish order flow. How hard is that? Okay. Now, I don't think I did a lot the last like hour and a half. I didn't really watch a whole lot, but let's come back to micros for just a minute. The S&P, okay? You saw clearly here our gap higher. We came down and we traded beyond the gap. So that in like the short term, that looks weak, right? Like, oh, it traded beyond the gap. That could be a weak market. It's like, well, you're right. But in the larger perspective, I don't want to say macro anymore because I don't want to confuse you between macro as in the large, right? Micro and macro versus like macro time windows. So it's confusing. It might be. So I just want to say the larger perspective, right? From a 5-minute time frame zoomed out, that ends up being a low risk buy. And you can miss that. I'm pretty sure we all missed that. Probably none of us saw that as a low risk buy. But that's okay. But why would you want to know that? Because remember, it's the order of models. Manipulation, then the low risk buy, then first stage, then second stage, and then the run to liquidity, right? Or the second stage run to liquidity. So if you looked at it and went, okay, we overshot the gap, but we came back up. And now we're consolidating, which is the first stage of accumulation. So remember, your NQ being lower, right? Let's do our macro here. And what I think Jonathan Contreras or something close to that. If I fucked up your name, I'm sorry. Just made an indicator that will do this. I couldn't find it. I think it's too new. But we'll get that figured out, and I'll try to have something, you know, for you guys next week, so we don't have to sit here and draw this shit all the time. But we'll do it today because, you know, we got to do it. So remember, I told you guys combine MMXMs with the macros. So what do you see here? 1 low, 2 low, 3 lows. So there's your 1, 2, 3 formation. We trade higher and then back down. Look closely. Okay, look closely. These 3 lower lows, right? So you could view this as a mitigation. That probably could be a little janky. I will say this though. If you looked at it like this, like that candle by itself, if you looked at that like, oh, that's the mitigation model, it does hit that during the macro. It does trade outside the parameters of both, but nonetheless, it was under accumulation. So we still see higher pricing. And then our retracement, right? What's up here? 75 and 50. What do you remember about that? I'm going to take this inversion off because I don't even think that met the way that I wanted it to. And again, this is in the market maker models masterclass. I told you right around 75 to 50%, meaning after we get close to our target, that 75 to 50% level, that's where you're going to see manipulation. That's where you're going to see short-term lows get ran. And you see that here. Then we rallied, small retracement, mitigation here, down candle here. And then we finally make our run above 59.10. So when you zoom out, that is what it looks like. There is your market maker model. And on top of that, 1150 is here to 1210 is here. So there's your 12 p.m. Central macro. That's pretty good, isn't it? I don't even know how I go down in viewers after I show you guys this cool shit. Like, is it too much? Is it too much? Or do you think it's jealousy? Man, I can't get entries like John. Man, fuck him. No, fuck you, bro. You need to study and learn. I'm giving you this stuff, dude. I'm handing it to you on a silver platter. I'm saying, here's the time. Here's the logic. Here's the price. Here's it all, everything. This is how you do it. But it's like, oh no, I'm gonna go watch somebody else. Well, fuck, man. All right, then go do that. But like, fuck, dude, it's crazy. Anyway, so regular trading hours gave us the low risk buy. First leg accumulation, 10 a.m. macro offered a little sloppy price action, in my opinion. Plus, some of you said it was near 50%, and you'd be right. You'd be right. But we still had a market maker model, buy model. You see, the electronic trading hours are going to be different. They're going to be different. It's all skewed. You see that? Like our manipulation is here, but then we do trade lower in Asia, and then our morning session low risk buy is here. So it distorts all this stuff, all of like London. But all that was a run on London liquidity. So that's the only thing a little bit strange about today. That's all. It's just the warp. It's just warped. That's all. You know, you put too much air in a tire, it's going to be warped, you know, but it still, nonetheless, it worked. But even if you like, let me put it to you this way. NQ had liquidity. ES had the buy model. So if ES is going to trade higher because of the market maker buy model and regular trading hours liquidity, NQ also has liquidity, but it's under manipulation. That's fine. NQ will still trade higher, even though it might not be in a buy model. Does that make sense? Remember what we did the other day, and I showed you that dollar index was in a buy model and the indices had lower pricing. So the dollar index being bullish meant that we were going to see weakness on indices. Do you remember that? It's the same idea here. You don't have to see that, oh, both NQ and ES are in a buy model. I don't see a buy model on NQ. I mean, shit. If anything, NQ kind of looked janky on electronic. But nonetheless, it still offered clean price delivery to the upside. and that was very clean. I mean, that's just dirty. You know what I mean? It's so clean, it's fucking dirty. Like, bro, where are the Tide Pods at? Like, I need that Tide pen, you know, that magic eraser or whatever. Beautiful. I mean, come on, bro. It's too clean. It's just so mint, bro. For a Friday too. But that's really about it. I mean, we talked about relative strength. We talked about inverted imbalances, which you actually do see on your screen, by the way. I'll zoom in here one more time just in case you missed it from earlier. But I'll just take this off. I was just trying to show you the specific lower end here. Both of these inversions never get traded to the low end. How do you get super tight stop losses? Just like that. Just like that. You can take the inversion with a stop at the low end of it. Now, again, that's a tight stop. Don't bitch at me if you get stopped out before the big move. I'm going to tell you I fucking told you so. But if you're trying to be cheeky and you're willing to risk it, do what you got to do. What do you think I did to get my final trade? I keep telling you guys about this final trade I took on Nasdaq, right? On a Friday, inside of a macro. That's what it was. It was a let me just take everything off because we're getting fucking ridiculous. It was something just like this. It was an imbalance right before a run on highs. But it was like after 50% and it was a little bit close. Like it wasn't this low on the price end, but it looked just like this. And literally I said, okay, cool. NQ, meaning not the micros, buddy boy, the big boy shit, the NQ on a 50K account. Right. I said, okay, cool. I'm going to enter at that imbalance and I'm putting my stop at the low end of that bitch. And that's it right there. I said, okay, cool. And then I think it was the 11 o'clock macro. And then it was like 1050, 1059. And then, or no, sorry. It was, fuck, I can't remember. It was like a couple minutes prior to 1050. So it was like 9 or 1048, 1049, and then bam, 1050. Whoop, drops down, gets me in, doesn't even get close to my stop, and then rallies for the highs. And that was the trade that got me funded. Like, come on, bro. I'm giving you access to information that can get you funded. I cannot promise that, but I'm literally giving you the keys to how I got funded. That's all I'm saying. So you can take it or leave it. You can take it or leave it. And yes, I don't know who asked that about macros. They are every hour. But I don't trade every single macro. Remember, you only need 1 or 2 good trades a week. And macros are every hour. So that gives you plenty of opportunity. You should never fear missing a move, ever. Never. Once you really understand this, you will never, you won't fear it. Even if you're late to a move, like, oh, I'm in a market maker buy model, but this is too late for me. Okay, I'll catch the next one. Simple. It's you who has to slow down and not try and pass a combine or pass a challenge or try and get rich overnight. You're doing the wrong shit. You can have the right information, but implement it improperly and fucking lose. That's kind of what Really Bright said yesterday. He's like, the concepts could work, but it's you who might not work. You know, the concepts are not going to work in your hands if you don't implement things properly. With the right time, price, and context, you're going to screw it up. You're going to think, oh, every imbalance is worth trading. They're not. That every inversion is worth trading. They're not. Mark them up. You can mark up every inversion. Not all of them are respected. Not all of them are worth taking. Right? Oh, that's pretty clean in hindsight, but I didn't want to be short today. But you get what I'm saying, though. So Do you have a model for the last Friday hour to trade before it closes? It's a really good question. I've never been asked that before. So, Fridays are different. So the Friday final hour is not just the final hour of Friday, but it's the final hour of the week. So sometimes the MOC, the market on close on Friday, can be wild. Or sometimes they don't do anything at all. But look, you're trading with 10 minutes left of the week. I don't ever want to do that. I would rather take a good, like yesterday. Oh my God, ES in like 4 minutes, in, out, and done. Like done before like 8:45 a.m. Those are the best days. Those are the best days. You make really good money, or you get like, that was on a combine account. So you really grow the combine account, right? You get closer to passing the combine. And then you got the rest of the day to do whatever you want to do. You're not worried about none of the macros, none of what anybody else is doing. You get your bag and you get the fuck out of Dodge, right? So now you don't got to worry about it. You can go focus. You can go outside. You could work out. You could drop a like on a stream, you know, watch other YouTube videos, right? Or go read a book or something, and it clears the rest of the day. This is my honest opinion. Once you actually get good at this and you start trading like Monday, Tuesday, Wednesday, Thursday, bro, if you're still looking for trades on like a Friday PM session, that's usually not a good look. If you couldn't have done enough Monday, Tuesday, Wednesday, and Thursday, think about it. That's 4 days. That means that was 4 a.m. sessions, 4 p.m. sessions, so that's 8 sessions, plus the macros within each one of those sessions. So what's 8 times like 3? Over 20. It's got to be. So there's like 24 or whatever it is, something opportunities. Thank you, capitalist. 24. That was like 24 opportunities. Now multiply that times 3, because there's 3 indices. So that's 72. Or I think. What's 24 times 3? Yeah, this should be 73. That's 73 opportunities just between the indices alone, not including gold, not including silver, not including oil, not including any of that. You see what I'm saying? So you understand market timing. You understand relative strength. You understand the abundance. Like, bro, what do you not know at this point? You know? Like, what else do you need? What would you like? What else would you like? If you know how to manage risk, if you know how to get on side, you're Gucci. Thank you, Ethernet, for the $9.99. Thank you. Appreciate that. That reminds me, we got to do some donating next month as well, or next week rather. There's more kids that need shoes on their feet, you know? So we'll probably do that next week. Chat. I back tested it in the last hour, goes bearish. I mean, it could be bullish or bearish. You know, I don't know. My point is, you should, in theory, have done enough during the week where you shouldn't be worried about Friday. That's my point. Yeah, there you go, Willow. Made everything much easier. Plus, like I said, the FOMO is gone. It's a refreshing feeling. Right. Okay, you gotta change a baby diaper. Okay, well, guess what? In another hour, there will be another macro. Or if that macro sucks or there's not anything, then an hour later, there's gonna be another macro. There's gonna be 20-minute macros all the time. Or here's an idea. If you're at work trading, you don't have to check your phone every 5 minutes. You could just check at the end of every macro or at the beginning of every macro. Like, oh, here, I'll give you a theory. I'll give you a theory. The 10-10 macro, right? You realize, oh shit, we ran liquidity. There's an inversion. That's the inversion model. Okay. So as soon as we trade outside of it, all right, I'll put an order there and I'll frame my risk on the inversion. I'll go back to work because I don't want to be a piece of shit. And my 1 to 2 is here, but you know, the equal high or the low resistance highs are up here. That's a nice little 1 to 3. Okay. I'll put my order in, but I won't check again until 10:50 because that's when the next macro starts. So I'll go back to work. I'll do my fucking job so I don't get in trouble and then blame John or somebody else or whatever. Right? I'll take a little bathroom break right around 10:45, 10:50. You just place the trade and walk away. Thanks, Amin. Appreciate that. It would be better. I forgot to mention that. It would be better if you guys donated directly to my guy because YouTube takes 30%. So, like, I mean, if you drop 10, I appreciate that. But me, I only get 7. So that 7 goes to the kids. So YouTube takes their cut. So I'll have to drop the link for you guys next time. But I'm still gonna give the full 10 though from you. It's just coming out of my pocket, but it's $3. Who fucking cares? You know? It's fine. I'm just saying it comes out of my pocket. The difference comes out of my pocket, and that's okay. But anyway, back to my point. My point in closing, and I won't have like 20 closes today. My point in closing is you could look for trades during a macro, and then you could let them pan out while you're at work. And so instead of checking every 5 minutes, just set an alert for the next macro. So then, oh, ring, ring, ring. It's 10:45. Oh, what happened to my trade? Oh, it ran straight to TP. Fucking awesome. Great. So now you're at work making money. Now you're passing a combine or making money on the charts because you're trading during a macro from liquidity to opposing liquidity, and you're blessed. There you go. And yeah, Flacco, YouTube's always been that way. YouTube's always been that way. A whopping 30%. And then taxes on top of that. So it's more like $6 or like $6.25 or something. I'm not a fucking accountant or no shit, but that's just how it is. But it's fine. It's not a big deal. Pop said, I've definitely noticed that in my trades just from journaling alone, I'll take a trade and the majority of the moves will happen during the macros. Yeah, big fucking surprise there, right? My management mistakes are made between the macros. Ooh, that's a good observation. That's a wonderful observation. So that's good. These are called breakthroughs, chat. And that's why I like when you guys share them too, because someone else might find that interesting. Like, oh yeah, you know, I should go back and study my trades. And the fucked up ones were when I was trading outside the macros, but they ran to TP during those times. You know a lot of secrets, chat. You know a lot of them now. All right, so that's it. That's all I got for you. MMBM on ES, regular trading hours, not electronic. Relative strength, 1, 2, 3 formations, macro entries, macro exits. Like, bro, you had the, oh my God, we're still going on silver. I might have to get rid of some of it. I might have to finally TP. Mind you, I haven't partialed, and I'm in from like March of last year and October of last year. I'm all in. Like, I have not partialed one time. I'm in from the 20s, from like 21, 23, because there's like a small, it's like $2 an ounce or something, but I'm in from like 22 or 23 an ounce. And I got some of them on discount too. And it's at 33. Disgusting. So, and dude, okay, here's the thing too. We're not even in the most bullish part of the year yet, typically. Like November, December, January. Oh my God, if we keep going, dude. Oh my God, I don't even want to talk about it. Big money. So you got big money on the side because you bought metals when I told you that I was, right? You probably didn't. That's okay. But remember, the ideal scenario is where you have stocks or whatever, you got long-term moves, and then you got day trades. And you shouldn't be worried about the big positions in your day trades. You see what I'm saying? And yeah, Flock, I'm waiting on Valentine's Day. Might get rid of it on Valentine's Day or like the day before. Not that I'm going to spend money on anybody. You know what I mean? But whatever. Anyway, y'all be good, man. Y'all be blessed. We'll be here same time, same place on Monday the 21st. All right, so study, guys. Go into your charts, look at your entries, look at your exits. Look at regular concepts, look at inverted concepts, look at the smaller time frames. Twitter says don't trade the one time frame. I will make everybody look like a fucking idiot because they are. If you can't trade the 1 minute time frame, you can't trade any other time frame. Price is fractal. It's a fucking fact. So guess what? Anybody that says, oh, 1 minute time frame, you can't trade. You can't trade. You understand? That's what that means. So don't listen to those fuckers because they don't know. Okay? They don't know. Look at your regular concepts. Look at your inversions. Look at your macros. Market maker buy models, sell models, whatever. And learn some shit. Okay? And look, here's the last thing, okay? I told you there wasn't going to be a bunch of last things. I lied. When you get good at analysis, okay? The psychology becomes easier. And if you can manage your risk, then if you're taking good trades with solid risk management, remember the three, the successful traders trio, right? Your strategy or your edge, your risk management, and your psychology. Well, guess what? If you have 2 out of the 3, it makes that third one a whole lot easier. Meaning, if you know how the markets book, if you know like the times they book, and you can just simply manage your risk and don't over leverage, your psychology will be easy. You're not worried about missing trades because you know that they're fucking all the time. You're not worried about a losing trade because you've managed risk to the point where you know your wins are going to outweigh your losses. So everything comes in alignment. And then you can do stuff like this, where you can enter before the moves and exit on the way up. I'm out right here at the high of the day on a 1 minute time frame. Okay? On a 1 minute time frame, my current exit was the high of the day. The high of the day on a 1 minute time frame. But Twitter will tell you not to do it. Fuck it. Goobers over there. All right. See you guys Monday.
Talk too much, man. I know niggas don't like talking.